Hello students, this video is my sixth video for the chapter Holding Company Accounts. For a better understanding of this video, kindly watch my previous videos for this chapter, for which I'll give you the links in the description. In the previous video, I have worked out a problem involving revaluation of assets. Today, I will be working out a problem involving issue of bonus shares, revaluation of assets and mutual obligations. Let me proceed further now. I will read the problem first. A Limited acquired 1600 ordinary shares of rupees 100 each in B Limited on 31st December 2019. Their summarized balance sheets as on that date were as under. Liabilities, it's given for A Limited and B Limited. Capital, 5,000 ordinary shares of rupees 100 each, 5 lakhs. 2,000 ordinary shares of rupees 100 each for B Limited, 2 lakhs. Capital reserve, A Limited nil, B Limited 1 lakh 20,000. General reserve, 2,40,000 for A Limited and nil for B Limited. Profit and loss account 57,200 for A Limited and 36,000 for B Limited. Bank overdraft A Limited 80,000, nil for B Limited. Bills payable including rupees 3,000 to A Limited, nil in A Limited column and 8,400 in B Limited's column. Creditors A Limited 47,100, B Limited 9,000. On the asset side, land and buildings A Limited 1,50,000, B Limited 1,80,000. Plant and machinery 2,40,000 for A Limited and 1,09,400 for B Limited. Investments in B Limited at cost in A Limited 3,40,000, nil in B Limited. Stocks 1,20,000 for A Limited and 36,000 for B Limited. Debtors 44,000 for A Limited and 40,000 for B Limited. Bills receivable including rupees 3,000 from B Limited. In A Limited's column 15,800, B Limited nil. Cash at bank A Limited 14,500, B Limited 8,000. Total of the balance sheet A Limited 9,24,300 and B Limited 3,73,400. You are supplied the following information. Point A, B Limited had made a bonus issue on 31st December 2019 of one ordinary share for every 2 shares held by its shareholders. Effect has yet to be given in the accounts for the issue. Point B, the directors are advised that land and buildings of B Limited are undervalued by rupees 20,000 and plant and machinery of B Limited are overvalued by rupees 10,000. These assets have to be adjusted accordingly. Point C, sundry creditors of A Limited include rupees 12,000 due to B Limited. You are required to prepare the consolidated balance sheet as on 31st December 2019. This particular problem is a problem involving adjustments and information relating to bonus issue, and then you have information relating to overvaluation and undervaluation of assets, and you have information relating to mutual obligations also. So let us see how to proceed with the answer. First, as usual, let us begin with a calculation of holding minority ratio. Okay. So let us begin with the calculation of holding minority ratio here. So what we are supposed to do for calculating the holding minority ratio is we have to look at the balance sheet. In the balance sheet, as per the balance sheet, in B Limited's column, which company is holding company and which company is subsidiary company, you have to be very clear. You are given in the problem A Limited acquired shares in B Limited. So A Limited is the holding company. This company is the holding company. This is the holding company. And B Limited is the subsidiary company. Okay, I hope you're clear with this, right? Now, for the purpose of calculating the holding minority ratio, you have to look at the share capital of the subsidiary company, that is B Limited. What is given here? 2000 ordinary shares of rupees 100 each, 2 lakhs. You all know very well that ordinary shares and equity shares are one and the same, right? So you're given 2000 ordinary shares of rupees 100 each. So how many shares are there in B Limited? 2000 shares are there. How many shares are there? 2000 shares are there. Out of these 2000 shares, A Limited is acquiring 1600 shares, okay, of rupees 100 each in B Limited. So let us proceed with the holding minority ratio calculation here. Total shares of B Limited is given as 2000, out of which shares acquired by A Limited is 1600. The remaining 400 shares, that is 2000 minus 1600, 400 shares, these are minority shares. So what will be the holding minority ratio now? It will be 1600 is to 400. 1600 is to 400, which will ultimately give you 4 is to 1. So holding minority ratio will be 4 is to 1. So this is what is the first piece of working note which we have to do. Calculation of holding minority ratio. Now let us proceed with the next calculation. The next calculation is about the bonus shares. So in this problem, the most important information available to us is to calculate the bonus shares, information relating to the calculation of bonus shares. So let us have a look at the sentence relating to this. So have a look at point A given in the problem. You are given in the problem. Limited had made a bonus issue on 31st December 2019 of one ordinary share for every 2 shares held by its shareholders. One ordinary share for every 2 shares held by its shareholders. Effect has yet to be given in the accounts for the issue. So we are going to give the effect now. So let me read the sentence once again. B Limited had made a bonus issue on 31st December 2019 of one ordinary share for every 2 shares held by its shareholders. So let us see how to calculate the bonus shares now. As it is given for one share for every 2 shares held. So how many ordinary shares are there in B Limited? There are 2000 shares. As per the problem, 2000 ordinary shares are there in B Limited. So for every 2 shares, 1 share means for 2000 shares, how many shares will be given? Okay, so now you have to do cross multiplication here. 2000 into 1 divided by 2, that will give you 1000 shares. So 1000 what shares? These are 1000 bonus shares. So what will be the bonus issue now? 1000 shares of rupees 100 each. That will give 1 lakh rupees. This will be the bonus issue. Now after calculating the bonus issue, we have to divide it between the holding company and the minority by applying the holding minority ratio. So what is the holding minority ratio we arrived at? It is 4 is to 1, is it not? So now let us divide this bonus issue between the holding company and the minorities by applying the ratio 4 is to 1. So we'll be having 1 lakh into 4 by 5, which will give you rupees 80,000. We will get 80,000, and then for minorities the share will be 1 lakh into 1 by 5, so that will give us rupees 20,000. So the whole value of the bonus shares, rupees 1 lakh, will be divided between the holding company and the minority as 80,000 and 20,000 rupees respectively. Now let us proceed with the next calculation, that is calculation of capital profit. All those profits which are existing on or before the date of acquisition of shares by the holding company in the subsidiary company will be called as capital profits. Okay. So now let us see what are the capital profits available as per the problem. Let us have a look at the problem here. So for this purpose, you have to see only the subsidiary companies column. In the subsidiary company B Limited's column, we have capital reserve. Okay, all these were existing on the date of acquisition itself. The balance sheet date and the date of acquisition are the same as far as this problem is concerned. Okay, so on that date, in the capital reserve, how much was there? 1,20,000 was there. So this will be will be a part of the capital profit. So right, capital reserve 1,20,000. And then this is a problem involving bonus issue, isn't it? So bonus issue will usually be done out of the capital reserve, that is capital profit only. So out of 1,20,000, utilize that 1 lakh for the purpose of bonus issue. Okay. So how much was the bonus issue? It is 1 lakh, isn't it? That 1 lakh will be taken from capital reserve. So from capital reserve 1,20,000, deduct 1 lakh, which relates to the bonus issue made. So now you will be having 1,20,000 minus 1 lakh. Just 1 second. 1,20,000 minus 1 lakh. So this is actually 20,000 only. So this is 20,000. Just 1 second. We'll be having 20,000 here. Okay, it is 20,000, right? Okay, now with this, add profit and loss account of B Limited, which was existing as per the balance sheet. You can have a look at the balance sheet again. Have a look at B Limited's column. In B Limited column, you have profit and loss account. How much is profit and loss account of B Limited? It is 36,000. Okay, so that 36,000 we have to consider now, which will be a part of the capital profit. So write as profit and loss account 36,000. Okay. Then as per the problem, we have some information relating to undervaluation and overvaluation of assets. In my previous video itself, I have told you how to treat undervaluation and overvaluation of assets. So you can refer to this to that video, for which I'll give you the link in the description. And now we can have a look at the problem and see what is the information available regarding overvaluation and undervaluation. Remember, whenever there is undervaluation, that amount has to be added to bring back the asset to its original amount. And whenever there is overvaluation, that amount has to be deducted from the asset concerned. Okay. So now let us see what is the information we have relating to undervaluation and overvaluation as per the problem. So you are given in point B. This point B gives you the information. The directors are advised that land and buildings of B Limited are undervalued by 20,000 and plant and machinery of B Limited were overvalued by 10,000. So there is undervaluation of land and buildings and overvaluation of what? Plant and machinery. So let us treat it now. So write as add undervaluation of land and buildings 20,000. So when you add it all together, you will be getting 76,000. So how is it 76,000? 20,000 plus 36,000 plus 20,000 will give you 76,000. From that, deduct overvaluation of plant and machinery, that is 10,000. This will ultimately give you the capital profits. So how much will be the capital profit now? 76,000 minus 10,000. You will get a capital profit of 66,000 rupees. So this will be the capital profit. So as usual, after calculating capital profit, what are we supposed to do? We have to divide this capital profit between the holding company and the minorities by applying the holding minority ratio. So what is the holding minority ratio as per our calculation? The holding minority ratio is 4:1. So holding company share in capital profit will be 66,000 rupees into 4 by 5, which will give you rupees 52,800. You can calculate and see. This will give you 52,800. And then minority share in capital profit will be 66,000 into 1 by 5, and this will give you rupees 13,200. Okay, so this is how you have to treat the issue of bonus shares and also overvaluation and undervaluation of the assets concerned. Okay, let us now proceed with the next information, that is regarding calculation of revenue profits. This is a problem where the shares are acquired, the holding company acquires shares in the subsidiary company on the date of the balance sheet itself. You can see the problem for this again. Have a look at the information given in the problem. The problem tells you A Limited acquired 1,600 shares of rupees 100 each in B Limited on 31st December 2019, and their summarized balance sheet on that date were as under. Okay, so on the same date of acquisition your balance sheet is given. So in such a situation, in which situation, if you are given a problem where shares were purchased on the same date of the balance sheet, then in such a situation all the profits existing will be regarded only as capital profits, and so revenue profits will be nil. So in this problem, we don't have revenue profit at all. That is why I have given you revenue profits nil. I hope you can understand why there is no revenue profit, because all the shares were purchased on the date of the balance sheet itself. So the information available is as on the date of the balance sheet, as on the date of acquisition, and as such, you have everything to do only with capital profit, and there is no revenue profit at all. Okay. Now, let us proceed with the calculation of minority interest. You all know what is the procedure involved in calculating the minority interest. I've already done 5 videos in earlier relating to this chapter, and in all those videos, we have the calculation of minority interest. You can refer those videos also. So, for the purpose of calculating minority interest, first we have to take the face value of the shares held by minority shareholders. Out of 2,000 shares of the subsidiary company, that is B Limited, we already saw that 1,600 shares were acquired by the holding company. So 2,000 minus 1,600, 2,000 minus 1,600 will give you 400, isn't it? Those 400 shares are held by minority shareholders. So now the face value of the shares held by minority shareholders will be 400 into 100, which will give you 40,000. With this, you have to add minority share in capital profit and minority share in revenue profit. We have already found out how much is minority share in capital profit, that is 13,200, and there is no revenue profit here, so minority share in revenue profit is nil. And you have bonus shares in this particular problem, isn't it? So whatever is the minority share and bonus share, that has to be added while calculating the minority interest. Okay, so how much did we have as bonus shares? As bonus shares, bonus issue, we calculated 1 lakh rupees. Out of 1 lakh rupees, how much is minority share? It is 20,000. This 20,000 will have to be added along with minority interest. While calculating minority interest, it has to be added. So add bonus shares issued to minority 20,000. Now let us total all this together. That total will give us minority interest 40,000 plus 13,200 plus 20,000. So you will be getting a total of 73,200. You can total it and see what will be the total here. The total will be just 1 second. The total will be 73,200. So this will be the minority interest. Okay. Now let us proceed with the next calculation, that is calculation of cost of control or goodwill. So for this, we have to take the amount paid by A Limited for shares purchased in B Limited, which will be mentioned on the asset side of the balance sheet. Have a look at the asset side of the balance sheet. So in the asset side of the balance sheet, you are given investments, isn't it? So this is what is the amount paid by A Limited for shares purchased in B Limited. It is 3,40,000. How much is that? It is 3,40,000. Okay, so let us enter that. So right here, just write as amount paid by A Limited for shares purchased in B Limited 3,40,000. From this, you have to deduct the face value of the shares purchased. How many shares were purchased by A Limited and B Limited? 1,600 shares of rupees 100 each. So the face value is 1,600 into 100, which will give you 1,60,000. Okay. Then you are supposed to deduct the holding company share in capital profit also. That we have already calculated. Out of the capital profit, the holding company share is 52,800. Record that. Then remember, this is a problem involving bonus issues, isn't it? So the holding company share in bonus shares also has to be deducted here. So what is the holding company share in bonus shares? Total bonus shares came to rupees 1 lakh, out of which 80,000 is for holding company and the remaining 20,000 is for minority. So holding company share of bonus shares is 80,000. So take all these amounts, add all these amounts now. So when you add all these amounts, you'll be getting a total of 2,92,800. Okay, 2,92,800 will be the total. From 3,40,000, from this particular amount, 3,40,000, you have to deduct 2,92,800. If you get a positive answer, that will be called as goodwill. And if you get a negative answer, that will be called as capital reserve. So what are you getting here? You're getting a positive answer only, isn't it? How much is that? It is 47,200. You just calculate and see, you'll be getting 47,200. So this 47,200 will be called as what? It will be called as goodwill. So how much is goodwill? Goodwill is 47,200. So calculation of goodwill is also over with this. Now, we have done all calculations. We are asked to prepare the consolidated balance sheet in this problem. So, for the purpose of preparing the consolidated balance sheet, what are we supposed to do first? We have to prepare the notes to accounts. Remember, you can do all this properly only if you are familiar with the format of the balance sheet. Okay, so you should know clearly the format of the balance sheet, the various note, and which will come under which note. You have to be very, very clear. Only then you will be able to do the consolidated balance sheet correctly. Under note 1 share capital, we'll be entering 5,000 ordinary shares of 100 each, 5 lakhs, which is given in A Limited's column. Okay. Now, note 2 is for reserves and surplus. For note 2 reserves and surplus, we'll be having a general reserve of A Limited and profit and loss account of A Limited. Remember, the general reserve and profit and loss account of B Limited will not come here. They have been treated already while calculating capital profit and revenue profit, though we didn't have revenue profit in this particular problem. Okay, so let us have a look at the balance sheet now. So just see the balance sheet. In the balance sheet, as far as capital reserve is concerned, you don't have any capital reserve for A Limited. General reserve for A Limited is 2,40,000 and profit and loss account for A Limited is 57,200. This will be considered now while preparing the consolidated balance sheet. This 36,000 B Limited's P&L account we have already treated while calculating the capital profit. Okay. Now let us just proceed further with note number 2. Note number 2. Reserves and surplus. General reserve of A Limited 2,40,000. Then profit and loss account of A Limited. Only the holding company's amounts will come here. 57,200. So if you add these two amounts together, you will be getting 2,97,200. So this will be note to reserves and surplus. Then we have short-term borrowings under which we'll have bank overdraft. You can refer the problem for this. Then note 4 is for trade payables. For trade payables, we have credit under trade payables we have creditors. So here creditors of A Limited as well as B Limited will come. So creditors of A Limited is 47,100 and creditors of B Limited is 9,000. So when you add both these amounts together, you'll be getting 56,100. But there is a very important point which you have to note here. You have mutual obligation in this particular problem, for which you have to have a look at the balance sheet problem once again. I'm sorry, you have to have a look at the problem once again. Have a look at point C. Sundry creditors. Sundry creditors of A Limited include rupees 12,000 due to B Limited. So this is what is actually mutual obligation. So this 12,000 rupees once we'll be deducting from sundry creditors on the liabilities from the liabilities, and once we'll be deducting from sundry debtors when we treat the assets. Okay. So this 12,000 mutual obligation will have to be deducted from sundry creditors now. So creditors less mutual obligation 12,000. So 56,100 minus 12,000 will give us 44,100. Then next we have bills payable, which will come under note 4 trade payables. Bills payable is 8,400. Here again you have a mutual obligation which is given to you as per the balance sheet. So let us just refer the balance sheet now for that. Balance sheet, bills payable you are given including rupees 3,000 to A Limited. So this 3,000 is mutual obligation which will be deducted from bills payable here, that is from liabilities, and from bills receivable as far as assets is concerned. That you will be deducting from bills receivable 3,000. Okay. So let us deduct this 3,000 from bills payable now as what? As mutual obligation. Okay, so that has to be treated. Bills payable less mutual obligation 3,000. Bills payable 8,400 less mutual obligation 3,000, which will give us 5,400. So now let us see what will be the total of note 4. What is heading for note 4? Note 4 is actually trade payables. The total of note 4 will be 44,100 plus 5,400. Which will give us 49,500. 14,500. Now let us proceed to the next note, that is note 5 tangible assets. Under note 5 tangible assets, first we have land and buildings of A Limited 1,50,000, B Limited 1,80,000. That gives us a total of 3,30,000. Then there is undervaluation as far as land and buildings is concerned. Add that amount, undervaluation 20,000, which will give us 3,50,000 as a worth of land and buildings now. Then next we have plant and machinery. A Limited 2,40,000, B Limited 1,09,400, which gives us a total of 3,49,400. We have overvaluation to the extent of 10,000 here, so which has to be deducted. So from 3,49,400 less overvaluation 10,000, we will get 3,39,400. 3,39,400. Now, when we add both these amounts together, that will give us the total of tangible assets, that is note 5. So what will be the total? Let us see. So we will be having 0, 0, 4, 9, 8, 6. 6,89,400. That will be note 5 tangible assets. Then note 6 is intangible assets. Intangible assets, we have calculated goodwill already, isn't it? That will come here. How much is the goodwill we calculated? It is 47,200. That is note 6. Then note 7 is for stock. A limited 1,20,000 as per the balance sheet. B limited 36,000. Put together it will give you 1,56,000. Then note 8 is for trade receivables under which debtors A limited 44,000, B limited 40,000, total comes to 84,000. There is mutual obligation. I told you, while deducting it from creditors, I said the same amount will have to be deducted from debtors. So 12,000 will be deducted now from 84,000, which will give you 72,000. Likewise, we have bills receivables 15,800 given. We have a mutual obligation of 3,000. Remember, we deducted 3,000 from bills payable earlier, okay, when we treated the liabilities. So now, while treating the assets from bills receivable 15,800, you will be deducting 3,000, okay. So 15,800 minus 3,000 will give you 12,800. 12,800. Let us proceed further. So 72,000. Already we have 1,50,000. Is it not earlier? Just one second. 1,56,000 is stock, note 7. Under trade receivables, what are the amounts we are having? We are having debtors after adjustment 72,000, bills receivable after adjustment 12,800. Put together, this will give us 84,800. 84,800. So this will be the total of note 8, that is trade receivables. Now let us come to the last note we have, that is note 9, cash at bank. Cash, as far as cash at bank is concerned, both cash at bank of A limited and B limited will come. A limited's cash at bank is 14,500 and B limited's amount is 8,000. Put together it will give you 22,500. So starting from note 1, we have finished till note 9. Okay. Note 1, share capital. Note 2, reserves and surplus. Note 3, short-term borrowings. Note 4, trade payables. Note 5, tangible assets. Note 6, intangible assets. Note 7, stock. Note 8, trade receivables. And note 9, cash at bank. Let us now proceed with the preparation of the consolidated balance sheet. You have to give the heading as consolidated balance sheet of A Limited and its subsidiary B Limited as on 31/12/2019. One main column will be there wherein you will be recording the liabilities and assets, and one small column is for note number and another column is for amount in rupees. So first, let us begin with the heading equity and liabilities. As I told you earlier, unless and until you are familiar with the format of the balance sheet, preparing the balance sheet will not be possible at all. Okay, so you will have to be thorough with the format. Having done all the note already, preparing this consolidated balance sheet is going to be very, very simple and easy. Under the main heading equity and liabilities, first give the heading shareholders funds. Under shareholders funds, first we'll be having share capital. Note 1, 5 lakh. Reserves and surplus. Note 2, 2,97,000. Then number 2 is minority interest, for which we don't have a note number. This is as per our working note 5. Okay. So minority interest is 73,200. Then number 3 is non-current liabilities, under which we have short-term borrowings. Note 3, 80,000. Then next we have current liabilities. Under that we have trade payables. Note 4, 49,500. Now let us add all these amounts together to get the total of equity and liabilities. Okay. Total of 1 plus 2 plus 2 plus 3 plus 4. Okay. That will give us the total of equity and liabilities. So find the total now. You can add and see how much you are getting. Okay. When you add all these amounts together, you will be getting a total of 0, 0, 9, 9, 9 and then 9. 9,99,900. 9,99,900. That will be the total of equity and liabilities. Now let us proceed with the next heading, assets. Under assets, first we'll be having non-current assets. Under non-current assets, tangible assets, Note number 5, 6,89,400. Intangible assets, note number 6, 47,200. Then we have current assets. Under current assets, we have stock, note 7, 1,56,000. Trade receivables, note 8, 84,800. Cash at bank, note 9, 22,400. So if you add all these amounts together, that will give you the total of the assets. Okay, let us add and see. So we'll be getting 0, 0 again, then 9, again 9, then 9, again 9. So it will be 9,99,900. 9,99,900. This is the total of 5, 6, 7, 8, 9, or this is the total of 1 plus 2, which is non-current assets plus current assets. Okay, this has to be the same as the total of equity and liabilities. Only then our answer will be correct. Okay, so what is the total of assets? The total of assets is 9,99,900. 99,900. And what is the total of equity and liabilities? So it is also 9,99,900. Okay, since these two totals are the same, our answer is right. So this is how you have to prepare the consolidated balance sheet, and I hope you are clear with this answer. So today I have worked out a problem involving issue of bonus shares, mutual obligations and revaluation of assets. Hope you are clear with the problem I solved today. If you like this video, subscribe to my channel and share it with your friends also. If you have any doubts, post it in the comments and I will definitely reply. Thank you very much for watching this video.